Hey, what's going on? Lysandra Everett here. I'm going to give you all a moment to get on. If you're watching the replay, make sure you hashtag replay so that I know that you were here, because what? My replay squad rocks, okay? You can skip ahead probably about a minute and a half or so to get to the content. But when you jump on, let me know who you are and where you're from so I can shout you out and say hello. While Facebook is doing its thing, I'm going to be inviting a few people to watch this. And then we're going to get down with the get down. Good morning. All right. Let me make sure. Y'all know I got to make sure my my technology is working. All right, hold on. Let me make sure I'm right here. Okay. I'm gonna need, boy, one of these days I'm gonna get this technology right. But until then, I'm gonna get right. Oh, Rosella's watching from Vegas. Hey, that sounds like fun. All right. Let's see here. There we go. All right, now I'm cruising. I'm cooking with gas. I am cooking with gas right now. All right, I'm gonna share this to one or two spots, and then we're gonna get going with this. So we can share this out. All right, one more spot. And you guys, make sure you're sharing this with your other small business friends, because, this is something that we really need to, as small business owners, we need to really be watching out with what's going on. That's the truth. I don't expect it. Your job as a business owner, of course, is to make money for your business. And, there's people like me, like Rosella, that we keep our ear to the ground on this stuff, because you are our clients. And this is how we serve you, by knowing what in the world is going on. Right? Okay, let us get going. First, I want to welcome you to the show, Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady. And when you tune into my show, you're going to hear about topics that are important to the home biz community. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And again, you come here to get your questions answered about topics that are important to home business. And today I'm focusing on the House GOP bill, and specifically how it impacts small businesses. Now, a few days ago, I did an in-depth review of the whole thing. But today I'm spending more time focusing on the home business and the small business arena, because that's what we're looking at. How is this proposed bill, even though it's getting some pushback already, like how is it going to affect small businesses? All right. So right now, there are three main groups that represent small business. There is the National Federation of Independent Business, there is the National Small Business Association, and the Small Business and Entrepreneurship Council. These are the three main lobbyists that go and fight for us collectively, whether we know them or not, on Capitol Hill. And all of these organizations have said no to this proposed bill, because they say it really doesn't do enough to help small business owners, to which I agree. And the reason is that, we're talking about, when we hear the word corporate tax, we are talking about generally the C corporations, right? And then when we think C corporation, we think the big conglomerate corporations that are international and the big monster corporations, okay? So with the proposed bill, okay, the main thing for the corporations is to cut the top corporate tax rate from 35% to 20%. And one of the things that was a campaign promise is that, small businesses like the mom and pop stores are going to, be able to reap this benefit as well. But that is not exactly how this is working out with this tax bill. So when we hear the term small businesses, we're thinking about the mom and pop, we're thinking about the convenience store owner, the restaurant owner, the hair salon stylist, the plumber, all these types of, small businesses that might have 1, 2, 5 employees. Okay. And then, the people's like, well, what is really the definition of a small business? There are so many definitions to put you in the small business category. I couldn't even tell you that, under $10 million, under 500 employees. There's so many different definitions for a small business based on the industry you're in. I couldn't even tell you what a specific definition of a small business is. That's how convoluted it is. But for us, in our home-based business industry, my community, we definitely fall under the small business. Okay. So the thing about it is that understanding the two different types of entities, okay, is that there's the corporation where the business itself pays a tax, and then everybody else is a pass-through entity. That's the S corporations, the partnerships, the sole proprietorships, the single member LLCs, multi-member LLCs. All of these are pass-through entities, which means that you pay income tax at your income tax rate. The business structure, the business entity itself does not pay taxes separately, okay? So when we're looking at this whole tax reform thing, like how is it going to benefit us? Right now in its present form, it really does not, because again, that pass-through entity is based on what tax bracket you fall under, okay? So you might be in the 12%, the 25%, the 35% tax bracket and not reap the benefit of that 20%, okay? So, and then the top tax bracket on the individual side is 39.6%. Okay, can we just call that 40% right now? I don't know why can't they just round up and call it what it really is, right? 40% of your money, all right? So, so here's the thing. So when we're talking about pass-through entities, it's not that 20% corporate rate really doesn't mean dip to us, because we're paying based on our income tax bracket, which could be 12, 25, 35, or 40%. All right, let's call it what it is. So, so it's for the GOP bill to say, well, we're going to top out that tax rate for the pass-through entities at 25%. On the surface, that sounds good, but the thing you have to understand is, what are we already paying? Okay. So for instance, right now on average, we don't pay more than 50%. According to the National Federation of Independent Business, over 70% of those small business pass-through entities don't pay a tax rate higher than 15%. Anywho, so to say we're going to cap out at 25%, that sounds good, but they ain't doing nothing for us. Okay. That's not happening. So, and then wait, so where's my, hold on a second, because I gotta share that with you. So according to the Small Business Administration, what I do with my thing here, I missed a page. According to this, here it is. According to the Small Business Administration, now on average, sole proprietors pay 13.3%, partnerships pay 23.6%, and S corps pay 26.9%. So again, that whole capping out at 25% really ain't doing nothing for us, because we're not paying it anyway for the most part. When you think about most sole proprietorships, because that's really what a lot of businesses are, even the single member LLCs. And we talked about this, that an LLC on the federal level is a disregarded entity. If you are a single member LLC on the federal level, you are a sole proprietor. If you are a multi-member LLC on the federal level, you're treated as a partnership unless you elect to be treated as an S corporation or a C corporation, okay? So otherwise, you're going to be a sole proprietorship, a partnership, an S corp, C corp. Those are the four main entities, okay? So Now, also under this bill, because one of the things that they saw is the potential for the wealthy to exploit that 25%, right? So then what they said is, okay, great. So there will be some people that don't qualify for that 25%. Those people would be professional services. Who would those professional services be? I'm so glad you asked. That would be people like doctors, lawyers, accountants, real estate investors, hedge fund people. Who else did they name in here? And these are mainly people that would have an S corporation, okay? Once that practice goes, one of the main things that they would do is become an S corporation because, for an S corporation, you are considered an employee of your business. You have to pay yourself a reasonable wage, and that is taxed at your income tax rate. And then whatever profit is left over is considered a distribution and is taxed at a lower rate. That's why people have S corporations, okay? So now what they're saying is under this GOP tax bill that these professional services corporations would have to classify 70%. Yep. 70% of your income would be taxed under the normal tax rate. Okay. So it again is going to depend on what tax rate you fall in. So if you fall into the 12% tax bracket, great. But if you fall into the 25, 35 and all of that, not so great. Okay. So, so the thing about it is that, again, we're not paying this 25% anyway. Now, there are the corporations and the small business, because see, there are still people, even though they're making these millions and millions of dollars, they're still pass-through entities, okay? And so the main people that would benefit is the larger small businesses. That's what I want to say. So the larger small businesses, to where you might have, a legal partnership. You got the attorneys, Jones and Jones, attorney at law. Okay, that's going to be a partnership. Those are pass-through entities. So those types of, larger small businesses would benefit under this tax plan. And so instead of allowing them really to exploit this, that's why they said you can qualify 70% of your income under the income tax bracket, but it don't say what to do with the other 30%. So I guess that's going to be a distribution. That was not clear. Okay, so then as a business owner, what do you do with this type of information? What you have to look at is really what's going to be your effective tax rate, okay? So when you file your taxes, when you file your Schedule C, your Schedule E for rental property, your 1065 for your partnerships, you get your K1s and your S corporation, you got to have your W2s and all of that. When you look at those numbers, if you are paying more than 20%, then you need to switch business entities, okay, based on this law. So again, don't go rushing out and getting your C corporation just yet. Nothing has passed yet. But if it does, then you need to look at what you're paying. You need to look at your income tax rate. So if you are paying more than 20% on your income tax rate, then you're going to need to switch entities to form a C corporation, because the one thing I will always tell you is that the tax law does not discriminate. So if it works for big, huge corporation, if it works for Apple and they're a C corporation, well, it's going to work for your little C corporation as well. Okay. That's how the tax laws work. They don't discriminate. So it just depends on the business entity that you have. All right. So don't look at this and go, okay, well, that's not going to affect me. It really is, because even though you might be making a little bit of money now, let's be honest. Okay. So your business might be new and you're saying, you know what, this doesn't really apply to me now. No, it does not. It might not. However, the goal is to grow a business that's profitable. And as you make more money, you need to be worrying about how you're going to keep more money. Because see, if you go to sleep at the wheel and you're paying 40% in that top tax bracket, right? Why would you pay twice more than what you need to? Why would you do that? I mean, if you're going to go to sleep like that, write the check out to me. Okay. But that's what you got to be looking at, you know, and don't get me wrong. When you're getting up there in that 39% tax bracket, we're talking millions and millions of dollars. Okay. But if your goal in life is not to build a multi-million-dollar business, why are you here? Let's be honest. We are in business to create wealth and legacies for our families. We are not here to run a broke business. We are not here just to get by. We out here to make money and get paid. All right. So as your income grows for your business, you need to be paying attention to these tax brackets. And that's why it's important for you to have an accountant, bookkeeper, tax professional, a financial team that's looking at this for you and saying, you know what? We're pretty close on this year. We might need to, to change your structure for next year. Okay. This is what your financial team does for you. And so I'm going to need for my home business owners, and I'm going to get off this soapbox here in just a moment. I'm going to need for my home business owners to start investing in a financial team. Your job as a business owner, unless you are a financial person, this is not for you to go and research and care about. You need to worry about how you're going to get more leads, more sales, and grow your business. Okay. The financial team, our jobs are to be back here looking at what's going on these tax horizons, on these accounting horizons. Okay. That's what we're here for. And I need for you to get in the mindset of building a team. If you've got your sales and marketing team, guess what? You need to have your financial team on the back end. Okay. That's what we do. If you're going to pay a social media manager because they know how to get your stuff out there all on social media and increase your visibility and get your Facebook ads down to a penny a click and all of that stuff, we back here on the financial end is saying, great, now that you're making all this money, we need to figure out how we're going to keep said money. Number one, by you not overpaying your taxes. And number two, you need the financial person that's going to teach you how to make your money work for you and grow your money. Put your money to work, because I'm telling you, we got the spending down pat. We can make some money and we can spend some money, but the thing that we ain't doing is growing some money. And that's how our mindset needs to shift. Okay. So I'm off that soapbox. But as far as this current plan for small business owners, on the surface, it really doesn't do a whole lot it doesn't do anything for the majority of us. Let's be real. It really doesn't do anything for the majority of us. It's really going to help those with the pass-through entities that are paying that 40% tax rate. That's who it's going to help. Really not going to help the rest of us. So that whole lowering the top tax rate, again, sounds good. But when you look at the numbers say we're not paying it anyway. So if we're not paying it anyway, lowering it really ain't going to do nothing for us. And that's why these lobbyists are saying, okay, we have no reason to jump on the bandwagon and say, yes, this is what we need to do. No, these lobbyists are going, dude, you ain't doing nothing for us. Why should we support you right now if you're not doing anything for us? So the tax bill as of November 7, 2017 is getting pushed back already. It really is. And, the GOP is trying to sell it however they want to sell it. They're trying to sell it as a tax break for the middle class. Yeah, again, it sounds good, but the tax credits that are going away, that might be an expensive choice overall. Okay, so that's it, you guys. So I really hope you got some good information about this tax bill, about how it's going to impact small businesses. Only thing I can tell you is stay tuned. And when I get some more, information, I'm, definitely going to be here telling you about it, because I feel that's my job, to help keep you informed about how things are going to impact your business. So listen, that's it. Home Biz Tax Talk. We air Monday through Friday, 9 o'clock-ish. Come here to get your home business questions answered. All right. Have a fantastic day, and I'll see you next time. Bye.